For more on markets, we are joined by Tommy Mancuso, president and co-founder of the Bad Investment Company. Tommy, stocks closed at record highs yesterday, kicking off the new year kind of in the right direction, right? Can this be attributed to that Santa Claus rally I was just talking about a moment ago that is kind of a bellwether for the rest of the year, or is something else driving this surge?
Absolutely. I mean, obviously starting off the year with another record high, nothing unexpected considering the year we had last year. But yes, I do believe we've got a lot of strong tailwinds moving forward into 2022. There are some areas of concern we definitely need to be cautious of, and that one of those being the Omicron variant, right? We've seen a little bit of a spike there, so I'm interested to see how those numbers play out in the future weeks ahead. Obviously, major factor we want to pay attention to is hospitalizations, right? We are obviously aware that this is a very contagious variant, but it's a little bit less severe and whatnot. Nothing to downplay by any means, but something we want to keep our eye on, especially if that impacts the supply chain by any means. Another thing we want to be cautious of looking at the new year is inflation, right? It seems to be coming out to a little bit better, flattening out a little bit, but just another thing we want to keep an eye on. But overall, looking forward, I think there's a lot of positive tailwinds. America's reopening. I think that narrative is still strong, and I wouldn't want to bet against America by any means.
Yeah, I mean, you look at last year, 2021 for the markets, every major average above 18% return. The last 3 years, we have above 15% return. The idea of that continuing into the new year amid kind of those persistent inflation concerns, supply issues continuing. Obviously, we're still in the thick of the pandemic is interesting, but there does seem to be kind of the bull case for the markets still going into this year. Want to pivot, though, to a story that we are focusing heavily on today. Obviously, it was the big story yesterday, Apple hitting that $3 trillion market cap, pulling back, though, after hitting that market cap. But it makes you think of the other big names kind of coming behind it, including Microsoft being one of those, expected potentially to hit that mark later on this year, probably sooner than later at the rate that we're seeing these companies kind of, go to the next marker. What do you think, though, this says about the tech sector, and especially the impact that it has on the markets? There's a lot of attention being paid to kind of the S&P 500 and just how dominant these big names and these market caps are to that, maybe potentially making it top heavy and more volatile.
Yeah, it's truly remarkable what some of these big tech players have been able to do. And the reality is they are the pandemic winners. Whether that's sustainable moving forward, it's probably some of those big players will maintain some of their strong growth in those categories, right? Given their dominance, given their growth, they've got strong cash flows coming into those companies. They're innovating in themselves. So I do expect some of those larger tech players to continue their strong growth. However, I think we need to be cautious in the tech space overall, especially some of those companies that are maybe in the early innings of their tech development. Maybe they're a little bit more speculative, especially in the SPAC space, right? Some of those companies aren't forecasted to have any kind of real revenue or anything for a handful of years out. So I think we need to be a little cautious, not get ahead out of our skis by any means when it comes to the tech industry. But it is remarkable what Apple's, Microsoft's, and Amazon's have been able to do. I know we all use their products day in, day out, but I think it's just something we need to be cautious of while we're getting stretched a little bit, maybe thin at the top with the valuations being at the levels that they're at.
I completely understand it, but it makes me think, you look at Apple, you look at their cash flow, you look at their fundamentals, even on a fundamental perspective, the valuations seem to kind of, match. And especially when you look at just how they're pivoting into kind of new market opportunities. Think of the metaverse, their long-awaited kind of AR potentially coming out later this year. The path that it has and the opportunity for market share when it comes to wearables, you kind of see the bull's case. And it seems like the bull's case, even at a $3 trillion market cap, that it has room to grow is more likely than not.
Yeah, I would definitely agree with you, right? I think there's going to be a point in time where we see Apple everything, whether it's cars, the metaverse, all the wearables, and they continue that. And then I'm not going to fight that by any means. Yeah. I just think we need to maybe look at some different areas of the market, maybe sometimes in the value space, right? We don't want to be so top heavily invested in the Microsofts, Apples, or anything like that. They're great companies. I want to be invested in them. I think we all want to be invested with them. But when we look at some of the other areas of the market, right, we just need to be cautious in some of those cases. Look at stuff that maybe has a little bit more value if we're looking to get a little bit, look for value to get a little bit more growth in our portfolios, right? We do know inflation, rising interest rates can affect those tech companies and tech industries. So just something we would be cautious of, right? I'd put up a yellow light, I think would be a safe bet there.
No, there certainly is the argument that the rate in which Apple has grown to continue that momentum, as it continues to potentially go up, maybe there's more opportunity in other areas and other companies that maybe haven't kind of broken through that growth opportunity yet, or that initial growth opportunity where we see the most rapid growth numbers. Just pivoting a little bit here back to COVID-19, that's obviously going to continue, unfortunately, to be a trend or at least a thread of concern and something that investors watch as we enter this new year. We all hope that wouldn't be the case, but it is. We saw the market kind of do a pretty dramatic pullback when Omicron first came out, kind of in the beginning of December. Since then, obviously, we're seeing a bounce back here as the strain we kind of realize is less, less side effects. It's not as strong or as deadly, at least, as Delta variant was. It is more transmissible. Do you think that we continue to kind of see these pullbacks every time a new strain comes, as it relates to COVID-19, as we do know there are probably going to be more strains out there? Or do you think this gets more sector specific, as we have kind of learned that each strain is different and each strain kind of doesn't have the same effect to the market? I think, with Omicron, you could say that the biggest impact was to airliners in the travel industry, and there wasn't as much of an effect on the overall market.
Yeah, I would definitely say it's going to be a case or variant by variant situation here. The Omicron, as contagious as it is and as serious as we need to take that, it is a little bit less, severity in its the disease and its effects and whatnot. So with that said, I think we are going to have these spikes in certain variants that come up and whatnot, and we need to just be cautious in what their contagious level is, their severity, and how they affect, and monitor the hospitalizations. I think those are things we need to pay attention to. It's something I think we're going to have to live on. It looks like it may be becoming a little bit seasonal. Now, how that may impact the airlines and some of those entertainment industries, right, that we see that usually have minor pullbacks there, I think it is going to be a little bit more sector specific moving forward as we learn to deal with it. But maybe that kind of flattens out a little bit, right, where it becomes a little bit more like the flu, where we see that happen, and then it just flattens out, right? It's not going to be, with the Omicron, we saw them pull back 5, 10, 15%. Maybe next year it's only a 5% pullback or something of that nature.
Before we let you go, I've only got about 30 seconds here, but I want to get kind of just quick predictions for the market in 22 and kind of any sectors you're eyeing in terms of potential opportunities.
Yeah, absolutely. I think overall there's a lot of cash in the system, and it's maybe a little spotty and choppy for the early innings of this year while we see some of these things play out, such as inflation and the Omicron variant. But I think with all the cash on the sidelines that are still on the sidelines, I think we move up the market pretty good. Maybe look at a 8 to 10% market this year. Some of the industries, again, I'm eyeing are definitely in sort of the entertainment space. I think there's value in gaming, especially as we see a lot of tailwinds with the reopening narrative, in addition to the expansion of legalization. I think that's one sector to definitely pay attention to this year. But again, I think overall, it's hard to not be optimistic this year. There's a lot of positive tailwinds. Yeah. We do need a few things to play out, but overall, I'm looking forward to another great year in 2022.
Yeah, gaming has maintained its momentum even despite the reopening, and we know the Bears kind of thought that would be a hindrance, and it continues to kind of be momentum for the gaming industry. Really appreciate your insight as always, Tommy Mancuso, president and co-founder of the Bad Investment Company.